What's up, guys, and welcome back to our channel. Today, we have a special guest, and I'm super excited to have him, Evan Rugan, also known as BoweryBoi. He's totally killing it in his craft right now, and we're excited to have him on here and share his side on what.
Thanks for having me, bro. Appreciate it,
Sir.
Yeah.
So let everybody know exactly who you are, what you do, how many years in the business, a little bit of background story.
Yeah, 100%, man. I have had this current financial technology company for the last 2 years. Essentially, what we do is anyone with a 700 credit score who has a business or looking to start a business, I can get them access to up to $250,000 and 0% interest to start or grow that business. Now, before we go any further, people, $250,000, 0%, what are you talking about? So many people, it doesn't seem real. I get it. Let me just explain that, is that they give you 0% interest for 12 to 18 months as a promotional period. They want you to work at this bank. For example, you go to Chase Bank, they'll give you $150,000 at 0% in order because they want you to store your money at that bank. Obviously, if you store their money at the bank, they can use that money to make money. So it's a promotional period. And we figured out that you can get, me personally, I got $350,000 at 0% interest by going to multiple banks. You go to, let's just as an example, you go to Chase Bank, you get 100,000. You go to Key Bank, you get 100,000. You go to Truist Bank, you get 100,000. That's 300 G's for your food truck, your Airbnb business, your Amazon FBA business. At 0%, you can do a lot of damage with that.
Yeah. So you can go to so people pretty much are going to 3 different banks and doing the same loan for all and getting
right
1,000 right from the jump.
Yeah. You can cheat on each bank. You don't have to be loyal.
Okay, got it. But when they pull your credit, do they see that? How much does it affect your credit on each? Like if you pull it out from one, it affects your credit, but then you go to a different bank to pull out, they see that you pulled out. How are they going to give you the same amount?
Yeah, I'll explain that. So essentially, this is all business funding. So they run your personal credit. So it's all so to get $250,000, it's completely predicated on your personal credit score. So let's say you go into Chase Bank, we get you $100,000. You get a personal inquiry, you get a credit check. We then, my team actually removes the inquiry off your credit file because it's business funding, but it's a personal credit check. So we remove that inquiry and we go to the next bank. So they don't even know that you got $100,000 of exposure from bank one when you go to bank two. So it doesn't reflect at all. That's the beauty of business credit. Is like, okay, if you have a personal credit card and you have a $10,000 limit and you max it out, your score is going to be in the tubes. But if you get $10,000 of business credit and you max it out, it doesn't report anywhere. It doesn't show up. So you can actually use the money.
Got it. So can I, let's just say I took out a home equity, a credit line, right? I took a loan out that has interest. I can go to your bank, take out a loan, a 12-month free of interest,
right?
Pay that off, and then slowly pay back yours.
That's right.
Like that?
Yeah. So if you wanted to, buy real estate, if you wanted to, a lot of people use it to buy crypto, Amazon FBA, really anything you want to do, you just need to know how to structure your file because so many people, they'll go in and you can't put the toothpaste back in the tube. They'll go in and say the wrong things, the wrong data points. They don't go in with the right credit check. It's almost like that's your first impression with the bank. You can only make one first impression. So I always say, hey, before you go in there, let me advise you a little bit on what to say, what your file should have to get you the most funding possible.
Gotcha. So that's how you do it with all your clients, right? You meet them in person, on Zoom. How do you usually meet with your clients?
Right now, just word of mouth, referrals, things of that nature. I sell money, so it's pretty easy. I'm not selling tires. I sell the cheapest available capital possible, so it's pretty easy to advertise. I just have to explain to people how it flows because people don't, they say 0%, they're like, all right, what's up with this?
Got it.
Yeah.
Now, if you're giving a no interest, right?
Right.
How does your bank make money for those first 12 months?
They don't. And the thing is, after 12 months, it will go to a higher interest rate for sure. I'm not here to be like, oh, banks are dumb and you'll get free money forever. No, they give you a 0% interest period to get you into that bank to start. But with, like a real estate transaction, sometimes you might only need the money for 6-9 months and then you pay it back and boom, you borrow that money for free. Then let me just say another thing. It's like, if you have a better credit score, you have a stronger credit score, even before the funding, your entire life's easier. You have a better rate in your car, you have a better mortgage rate. You're not getting all these declines. It's like I always say, like, For every 10 points your credit score is lower, on average, you pay an extra $30,000 in interest on your mortgage. Like, you know, and you can get 0% on car notes as opposed to, I mean, I see some of the bank notes, some people buying on their cars because they have bad credit. I'm like, yo, if you just let me work on your file for 1 week, I could have saved you thousands on that car. You know?
There you go, man. You hear it. Now, okay. When you qualify someone for this, for, you know, 100,000,
Right.
what exactly do you look for?
Comparable credit, you know, the breakdown of a credit score is 35, 30, 15, 10, 10. So 35%, have you made on-time payments? Okay. You made your credit card payments on time. Do you have any collections, things of that nature? That's the first part of it. That's the credit repair. You know, if you have any late, we want to take that off, because something with business credit is that if you don't pay your car note, they repo the car. If you don't pay your mortgage, they take the house. They foreclose on the house. With business credit, there's no collateral. You're the collateral. So we have to make sure your personal credit is as strong as possible. So 35% is on-time payments. 30% is your credit utilization. We want to get all your credit cards below 20%. 15% is your age. How long have you had credit? And again, there's hacks to increase the age of your credit. If you're a young guy, you know, we had a 21-year-old get, I think he's 22 now. He turned 22 last. I think he got $225,000 for his to run Facebook ads. So if you're a young person, you're not disqualified. We just sometimes need to add some things onto your file to increase the age. 10% is inquiries, and the last 10% is diversity. Do you have what if you only had credit cards? Sometimes they'll want to see student loans, car loans, installment loans, pledge loans, a little bit of diversity, so they know that you've serviced different types of debts.
Okay.
Yeah.
So you hear it here, guys. If you're a small business owner, you're looking to get some sort of loan, you know, for credit, and you're looking to start a business or pay off, you know, other loans that you've taken, you know, and having an interest-free payment for 12 months, definitely check this guy out. You know, he's definitely one of the best, or the best.
Yeah, man. It's interesting because there's not a lot of people that do it, and there's not a lot of people that have cracked the code. We're really, really early. I mean, we've, you know, helped all people from all walks of life. Like I said, their real estate flip, their Amazon business, running Facebook ads. And like, that's another thing. It's like, I got a guy $75,000 on Chase. He used all that money just to run ads. I think he got like $5,000 back in points that he just pays his rent with. He's been paying his rent for the last 4 months with credit card points from running Facebook ads.
Great.
Yeah.
All right. Now, I know you also do credit repair.
Right.
So, you know, tell us a little bit about more of that, because I work with a lot of clients that have credit scores, you know, the low fives,
Yikes.
550s, and, you know, they want to get loans, right? But they're going to get crushed on their interest rate on the loan, right? They're going to get totally crushed. So, you know, what's some tips and, you know, tricks that they should be doing to help, you know, get that credit up, or what can you do to help repair that credit?
Yeah, so the one thing to remember as a consumer borrowing debt in America is you have more rights than anybody, and you want to be leveraging those rights to take off any negative items on your credit. Even if you rightfully know, you're like, I did not pay that card, I was late. You can still get late payments, collections, charge-offs removed out of your credit. For example, do you know what a collection is? Okay, let's say you get a collection. What a collection is a third party bought that debt. Let's say you missed your Visa payment, okay? A collection company will buy that debt off Visa for 10 cents on the dollar. Let's say it's a $10,000. They probably bought it for $1,000. And their bet is that they're going to garnish your wages, and they're going to collect that money to make money back on their investment from buying that collection. You don't never pay a collection, because technically when something goes to a collection, you have to sign off on that. You never signed off on anything for it to go to collections, right? So you can get that collection removed off your credit. Same with the charge-off. You need to sign off for that to become a charge-off. Late payments, I'll wait for this guy to walk by. Okay, beautiful. Late payments. Let's say you have a late payment. If it's not accurate and the same in all three bureaus, it can be deleted. So there's Experian, Equifax, and TransUnion. Also, if they can't verify it, that's a huge thing we use for credit repair. So you could be like, yo, I'm dating Selena Gomez. I'd be like, okay, verify it. Like, prove to me that you're dating Selena Gomez. And if you can't prove it, then that can be deleted off your credit report. So we do the same thing with all these credit card companies. I'm like, all right, prove that you were late on your credit card. and the files are deep in their hall. They don't know where the information is. They can't prove it. Then okay, if you can't prove it, you have to take it off of my client's credit report.
So that's crazy. So I mean, like, all right. So with collections, right?
Right.
Let's just say you go to the doctor office.
Oh, never pay a doctor's collection ever.
So, but sign off. So what do you mean by sign off? Because I've gotten a collection before, and I've gotten it off I've got it maybe 5 years ago, and I didn't realize I had it.
Right.
Right. But by signing off, what do you mean by signing off?
So you have to technically, legally speaking, you have to sign that something is going to go from a regular account to a collection account. And obviously you didn't sign anything for that to go. It just becomes a collection if you don't pay it. So you can just use consumer law to remove that off your report.
That's crazy.
Yeah.
All right. So if you get a collection that you don't know about,
and also a collection. So your credit card reports every single month, right? A collection reports one time on your credit report. So if you can remove that off your report one time, 90%, I'd say odds it's not coming back onto your credit. Here's another way that keep people broke. Okay, so have either of you bought a car in the last 2 years?
I've leased, and I'm now financing.
How many inquiries did you get when you bought a car?
Inquiry,
like credit checks. If you usually they'll something called shotgunning. They'll go in and they'll just keep running your credit to get the best rate possible. That's what they say. But each time they run it, they decrease your credit score and make your file more at risk.
Yeah.
So let's say you go in, you don't have any inquiries, and they run your credit 5 times. At the end of the day, you have 5 credit inquiries. Your credit score just went down 25 points, and you're going to get a worse score you're going to get a worse rate on your debt on your car. And all those inquiries can be removed because they're technically not tied to an open debt.
Oh wow.
Yeah, I had a guy.
That's if you bought.
That's even if you bought it. Well, yeah, if you finance too.
I can get it off?
Yeah, you can get it removed.
So I currently have one right now. So you're telling me that I can get it removed?
Yeah. If the names don't match, like, so for example, if the inquiry would come from car dealership A, but the car is a Toyota, it doesn't match on the credit report, so that can be removed. Yeah, check it. Do you have Credit Karma?
Chase. Let's see. Chase. Credit Karma. I've Chase.
Okay.
Finances.
And we're getting pretty technical, but on Chase, that gives you the Vantage score, which is kind of an inflated number, but at least will give you the data on your credit.
Okay, well.
69,000 points. Dude, use them on your next flight to Cartagena. Seriously, pay for the flight. Or wherever you want to go.
Yeah. I just rack up the points, man. I don't know what to do with it.
Well, that's $7,000.
7,000?
Oh, no, sorry. It might be 700. 700? Yeah.
All right, so right here. Boom.
Okay, so that's your auto loan, right?
That's my auto loan.
You 3 credit checks. Yeah, you should be able to remove all those.
Okay. Amazing. All right. Pretty much, so I can get all those. I can get all those credit checks off.
Right, and that's how they keep you poor. Because if you have more than 3, you're deemed high risk. You pay higher interest rates.
If I'm trying to build my credit, right, what are some steps that I should take to, get that score up?
So you're starting from square one, you're saying?
I'm like, all right, so I don't have any, well, let's just say I got the collections off.
Yeah.
Right, my balances, right, my cards are maxed out. My score is around, 550. I want to get it to 700,
right,
720, so I can get a good interest rate when I'm purchasing a home. What are some steps that I should take, in order to get me up there, slowly build me up there?
Well, if your cards are maxed on the personal side, you got to pay that down, because that's 30% of your credit right there. Okay. Like, we can get the score a little bit higher, but number one, you got to pay your bills. So you got to get that down below. I think above 30%, it starts to negatively affect your credit score.
Yeah.
Number two, I don't know your scenario, but if you rent, for example, you can have all your rents reported onto your credit. For example, I pay $2,000. I have 3 different companies report my rent. So every time I make one payment, 3 different companies report it, and I get credit for $6,000 of positive payment history. And that matters because when you go for a mortgage, they'll see, okay, this guy's serviced a debt of $2,000. Like, will we be happy to give him a mortgage? Okay. So report all your rent payments. You're a young guy. I would get an authorized user, meaning that any person who's older than you who has a credit card, it could be your dad, your mom, your uncle, a friend. You can add an authorized user, meaning that they call their credit card company, hey, I want to add this person onto your credit. Doesn't affect their score at all. You don't even get the card, but then you'll get let's say they have an 18-year-old card, you'll get that 18-year card onto your credit, which will increase the age of your file.
As long as whoever you're an authorized, that's really good. So as long as you're an authorized user on somebody's account, they're paying on time.
You inherit all that good history, yeah. Well, that's what they won't tell you. Like, for example, I have a 19-year-old LL Bean credit card that I don't even have access to, but it's on my file from my dad. Because I was about to refinance a property. I'm like, hey, I need to increase my score. It's got like a $20,000 limit on it. And, yeah.
Okay, gotcha. What's your take on having a credit card and not using it? So, like, I have a credit card. I got it when I was back in high school. It was like a building one.
Yes.
Little limit, but I just don't touch it. Like, it just sits there.
I think it's awesome. Never close it. I would say, though, put one thing on every month. Buy gas with it. Do something reoccurring, maybe your phone bill, because if you don't use it at all, eventually it will get closed. Okay. But definitely don't close the card because that's building age for you.
So how did you get into this, right? With the funding and the credit repair?
Yeah. So I'm originally from upstate New York. I waited tables from age 13 to 19, and I grew about 3 hours north of the city. I'd always pass out business cards, like half for like business opportunities and half for like girls I thought that were cute. I thought that was the move, giving out business cards, which is insane. Simpler times. I had an envy too, Yeah. But I met this one couple, and they're like, hey, can you watch my house for the week? I think the first job was, can you wash my kitchen floors? I'm like, sure. And the jobs kept elevating. Can you watch my house for the week? Can you watch my dog? Eventually, they're like, hey, can you come to New York for a month and watch our townhouse? We're going to Australia. She was Australian. So I watched their house for a month. I'm in New York. I'm 19 years old, first year college. I don't have a single hair on my face. I don't have a fake ID yet. So I still can't get any girls. So, all right, let me get a real estate license. I got a real estate license in that month. That was January of 2014. Went back, finished my second semester of community college. Like, hey, we want you back. I moved to the city May 18th, 2014. Lived with this elderly couple, moved down here with $500 in a duffel bag and started selling real estate, started renting apartments in the East Village. And I was the worst agent ever. Think about it's a huge purchase and I show up, and I'm unfamiliar with the area. I'm 19 years old. I'm not super confident. So started selling real estate. Eventually, at my peak, the New York Times called me the frat whisperer. We did like $2 million in revenue and rented over 500 apartments. Then this thing in March 2020 happened, COVID, and I was 25, gave me time to reflect. I'm like, hey, I want to get to the other side of the table. I want to start buying real estate. So I started acquiring real estate, and that was cool for a couple of years. Had some good deals, had some bad deals. And then I went to refinance one of my properties, and I had a 660 credit score because I had a collection. I had 15 inquiries. So I learned how to do it myself. I learned how to, 1, remove negative items, 2, strengthen my credit score, and 3, I thought that was Steve Ballmer. Crazy. You know what Steve Ballmer is? The Clippers. Yeah, that's Steve Ballmer. Yeah, that's why I don't know what he's doing in New York. He was like second to Bill Gates. I'd give it an 80% chance. But anyway, yeah. So started. I needed to learn about my credit. Got access to funding. Got access to $250,000. Then like people just started organically hitting me up. Hey, I can use some money. I can use some credit help, whatever. And I'm like, damn, I got a business here. And now I've really pivoted away from real estate, selling off all my assets and going all in on growing this finance company.
So like you said before, right? You can give us the funding, 0% interest, right? It sounds good, right? For 12 months, but no issues, right? Now, as a regular consumer, what's the catch? What risk do I have? Do I have any risk, right? What should I be worried about, right? Well,
you got to pay it back. You got to put it into an asset that's producing cash, or you got to put it into a venture that's making capital, because it's not a grant. It's a 0% interest loan for 12 months. After 12 months, it escalates to a normal business credit card. But you have to pay that money back.
Got it.
Yeah.
And so once after the 12 months, how How high does the interest go?
Yes, it's between 18 and 22% is where it goes to.
Pretty similar.
Yeah, yeah, it's probably the same thing. Yep.
All right. Now I know when you moved over here, right? You were living with that family,
Right.
right? And you told me a story about when you started renting.
Yeah.
Right? You went through a big change, right? What was the story you were telling me about with the rent payment, right?
Yeah. So previously, before I moved over here, I lived in Bed-Stuy. It was a 2-bedroom that we converted to 5. I think when I left, there were 6 people. It's like we just came through Ellis Island. Like we're packed in there. But I always wanted to save money. So I had this landlord young guy, he took out I think $160 million loan. He had a good deal on the real estate, but it was very high leverage. It was a predatory loan. So I could tell he was running out of money. He offered me an apartment on Avenue B, Avenue A, which isn't as good of an area. I'm like, no, I want to live on Bowery. And he's like, no shot. I'm like, all right, I'm gonna chill, because decisions in real estate are made of one of two places: greed or fear.
Yeah.
So he's not making decisions out of greed. He's fearful, because I can tell he's running out of money. Eventually, he's like, yeah, you can move on to Bowery. You got to pay 75 G's up front. I'm like, hey, no. How about 48? We eventually got a deal done. Paid $48,000 up front. I moved in December of 2016. I moved into the apartment. Like 3 days later, and keep in mind, I'm 21, 22 years old. All my friends are on Facebook, graduating from college, and I'm dealing with a slumlord putting in my life savings. And so I've been living there for about a week, and just 2 Hasidic guys walk into my apartment, like just walk in, and they're like, were shocked to see me. I'm like, what's up? And I think they thought I was a squatter. They're like, yo, you got to get out of this apartment. You got to go. I'm like, what are you talking about? I live here. And they're like, what? So what that was the guy who I'd paid $48,000 to had lost the building in foreclosure. Those guys were something called receivers. They are the property management company that are brought in when someone goes into foreclosure, when it goes from the person who lost the building to the new buyer. So they were the property managers in the in-between. And so he never told me, or he never told them that he rented the apartment to me. So so I moved in. And I just paid my life savings. A week later, I got a fat eviction notice on my front door, and I'm freaking out. And I contact a lawyer, and I walk into his office, and he's like, "Holy shit!" I'm like, "What?" And this is a random lawyer I just found. He's like, "I represented the lady. He paid someone like $75,000 to move out of this apartment a year ago. So what he was going to do, he was going to pay her to move out, renovate the apartment, but he ran out of money. So he paid her and then never renovated the apartment. So I moved back in." He's like, hey, this is a rent-stabilized apartment. This is, rental fraud. So I flipped the lease back in the rent stabilization. They offered me as much as $250,000 to leave, and I turned it down, and I turned it back into rent stabilization, and I've lived there for 8 years now. Yeah,
it's great. I want to know how you found that exact lawyer.
No, straight up, man. I called this guy, Mitch, who was from upstate, but I knew he worked in the city. He's like, oh, I used to share an office with this guy. And the guy now, his name is David Frazier. He's retired. I was like one of his last cases, but he was the perfect lawyer. And he told me that the landlord devalued his building by $400,000 by placing me as a tenant.
Crazy.
Yeah.
Imagine being 21, living in the city, giving your whole life savings an apartment, right? Now you think you're losing it. You're getting foreclosed, right? Getting evicted out of that apartment. And now you have a decision to make between $250,000 or being in a rent-stabilized building, right? How much were you paying?
18. Now I pay $2,000 8 years later, so.
$2,000 apartment. In the west side?
Bowery. So, yeah, east side. Yeah. And I'm the youngest one in my building by like 50 years. My neighbors hate me.
What's the average? What's the average in apartment over here goes for?
I mean, I'd say my apartment probably should be like $6,000. Yeah, no, I used to throw parties all the time, and one time my neighbor put a note on my front door, and it was like, "Who do you think you are? Blah blah blah. There's people that live in this building." I'm like, "I let you know I was throwing this party." So the next time I threw a party, I printed out like 20 shirts with her note and said, like, "Who do you think you are?" And it just said, "Free, take one." She was so mad. Oh God.
Right. So that's all that we have for today. Evan, thank you so much.
Yeah, of course, Bill. Thanks for having me on.
That was legendary. Thank you for sharing all that. For all that amazing knowledge with us. If you're a small business owner, looking to take out a loan, right? Is you need a no interest for 12 months, either to pay off a loan or to, start something up with an ad, down payment for a house, whatever it might be, right? That's something he does. Also with credit repair, right? If your credit is low, you need to get that credit up in order to, purchase a home, right? To get a better interest rate. You got to check this guy out. Check him out. How can they find you?
You just find me on social media, BoweryBoi.
Boy.
All right, cool. Thank you, man. Thanks again. I appreciate it.